Starting Dispersion Capital is probably one of the most humbling experiences of my life. If you're not a good people reader, it's harder to be a good VC. We're trying to find technology that will push forward decentralized infrastructure, that will push blockchain into the masses, rather than having these, asset bubble
Right.
creation.
All right, Patrick, thank you for joining us on Speak Bold. Nice to have you.
Thank you for having me.
Yeah, so tell us a little bit about how your journey began to get where you are now at Dispersion Capital.
Sure. Yeah. Happy to give you a quick history on myself and kind of what inspired me to start Dispersion. A quick background on myself is I've been a venture investor for almost 20 years. Started my career in, investment banking, like a lot of VCs have. But in New York, on Wall Street, kind of dating myself, started at Lehman Brothers before the financial crisis in 2005, before the collapse. But yeah, did the whole analyst program there, focused primarily on tech investment banking. But from there, kind of specialized in infrastructure technology. And immediately after that, began investing in infrastructure technology, but kind of in New York, doing the whole scale of, later stage growth equity type, and then coming downstream into doing earlier investing.
And how did you get involved in tech investment banking specifically? Was that always something that interested you when you were younger?
Yeah, when I was younger, tech has always been a part of my life. My dad was in tech back in the day, and just kind of got me very excited about tech. We were one of the families in Houston that had internet first. This is it's kind of funny. Back then, we dial up and all that kind of internet. But we were one of those that had first, and I was very excited. People used to come over to our house and play with it. And while in high school, I started a web design company, building a few different web designs for
entrepreneurial spirit.
Yeah, exactly. Early on, websites for like my tennis academy and other small businesses in the area, and just that kind of piqued my interest in tech.
Cool. All right, so you're at Lehman Brothers, pounding the pavement, probably long hours, pretty intense. So at what point did you make the move into something a little less traditional?
Right. It's kind of funny. Like in investment banking, I think it's one of the opportunities where you learn the most, just given how hard they work you initially, but then the learning curve kind of ends very quickly. And you realize you're almost like a monkey on a keyboard kind of mentality. But from there, it was super interesting working with so many of these technology companies, and realizing there's so many opportunities that's kind of happening here. But usually in investment banking, you're working with later stage companies that are trying to raise large amounts of capital, going through M&A sales or going through IPO, but you kind of move away from the innovators, the people that are building cutting edge technology first. So that kind of intrigued me. It was saying, like, what did these companies look like early on in their life cycle, and how were they built? And that's what got me interested in investing. And I realized while in investment banking that there was this other whole asset class that was called venture capital, and something I didn't know about. I didn't realize a lot of times these companies that were our clients were backed by venture capitalists, and those were the people that have been with them from the very, very beginning. And that's what kind of inspired me to look into it and see how can I be a part of that kind of journey.
Now, before Dispersion, you have venture experience. So walk us through where you went and what you learned.
Yeah, sure. So, I had, as mentioned, like multiple different styles of venture. So while I was in New York, I joined Bain Capital Ventures very early on when they were opening their New York office, worked with some great people. And then that's when I kind of decided to transition to come out to the West Coast. So while in business school at Columbia, I was working remotely with Foundation Capital, and part of their, they had this program called Young Entrepreneur Program, where they took a lot of business school students from various different schools to learn the ropes on venture. And I was helping them scout out New York opportunities, and they invited me to come join them for a little bit on the West Coast. And at that time, I realized, that's what I wanted to do.
I like it.
Yeah, I wanted to scope it out. And I was going to mention, it's like, come as the tech capital of the world. But at the same time, when I joined, it was during like the New York time frame around 2012 to 2014. I kind of got introduced to Bitcoin, but I didn't know exactly what Bitcoin was. And as a venture capitalist, I'm really trying to think of like the next wave. I'm a thesis-led investor trying to think of like what the next kind of technology wave is. And but I didn't know what to do with it yet. So while I was here, I kind of realized there was this like big explosion of data, how like data was kind of moving back and forth. And that's what got me to start thinking about how blockchain can kind of fit into this tech infrastructure background that I have. And at the same time, this is kind of where I joined Samsung Next Ventures, which was just forming a brand new tech innovation arm for Samsung.
Did you know people at Samsung and you're like, you know what, this is an arm you need to need to get ahead of?
I saw, it wasn't a role that was created just for me or anything like that. And I didn't know anybody at Samsung, and I never ever actually thought I would join a kind of corporate venture arm before. And this is actually even before it was, a exclusively venture arm. It was more of a kind of innovation group. And it was a blank canvas. They were just trying to figure out how can we, really help innovate a giant behemoth like Samsung. You hear about like the stories of Sony and other big tech conglomerates that end up, not moving as quickly as our early stage startups. And Samsung was trying to take a little bit of flavor of how can you infuse Silicon Valley DNA into a big company, big conglomerate like Samsung. And, joining this team, it was completely blank canvas. Like we could do whatever we want-ish here. And, we decided that, working with early stage startups was a way for Samsung to kind of have a pulse on what was going on. And you can also put gasoline onto the fire of these early stage companies. A big company like Samsung could be great distribution partners, be great tech partners, all that kind of jazz. And then we could also keep, very great pulse on what's going on.
At what point do you kind of go, okay, I think we're going in a direction where I'm gonna pack my things and forge on?
Yeah, it's super interesting because I had two focus areas, and one was edge computing and one was blockchain. And both of them straddle a thesis around decentralization. I saw that data was moving rapidly and exploding, and physically you couldn't move the data from the end devices all the way to the centralized cloud and back anymore. And you would have to push compute to the edges. And this idea kind of took hold, and I began investing in multiple different companies from both the blockchain angle and edge computing angle. Edge computing, I felt, was a shorter term kind of opportunity because every company we ended up investing in edge computing ended up getting bought very quickly within a year, 2 years. And it was really, this kind of made me think that, this decentralized infrastructure thesis is taking hold. Maybe I need to leave Samsung and rebet on myself because this thesis idea. I had no idea where blockchain was going to go. I've been investing in 2 cycles. I saw the bull and bear market, but it never hit the height of a mega bull market yet. So all of the companies I had invested in the blockchain space were continuing just puttering along. They raised multiple different rounds, but didn't explode. And ironically, is immediately when I left Samsung, a month later was the most recent crypto bull market. And I led the early investments in companies like Dapper, Alchemy, Forte.
So this is what, like 2020? No, I guess it would be earlier.
This is 2021.
Okay. Yeah.
So January 2021 was when I left Samsung, and February 2021 was when the NFT market
things got crazy.
Exploded. Yeah. So Dapper, one of our early seed investments, ended up raising massive round, and then quickly following that raised another big round. So we had multiple different companies just become unicorn after unicorn after unicorn in the blockchain space. And then I kind of realized, putting the 2 and 2 together, is that that there was such a big opportunity that was happening here that I really needed to push myself to start. Well, I didn't know at the time but to push forward on this decentralized infrastructure thesis. So that's what kind of inspired me, that I needed to follow this decentralized thesis and start Dispersion Capital. And with a lot of encouragement from many different mentors in the market, former portfolio companies. That's what really inspired me to start Dispersion, because I saw this whole wave of 2021 blockchain. Everything was chasing after NFT applications, but everyone kind of forgot about the infrastructure layer.
Right.
And that's where I decided that Dispersion was kind of an opportunity to kind of tap into that market.
Yeah, I think anybody who's in the space enough understands that layer that you're talking about. But a lot of people on the outside, they're looking at a piece of art, digital art, something that that has a value. You might pay for it, you might trade it. But there's a lot that's going on behind the scenes, and a lot of companies that are doing things behind the scenes. To somebody who, I don't know, let's say you're at a dinner party and they go, Patrick, what is Web3 anyway? I mean, what is your kind of layman term for what this is that you're so interested in?
Yeah, I think the Web3 is ownership, and ownership in this new internet paradigm, where in the traditional internet, all of the platforms monetize on you as a user, but Web3 is a platform where you get to monetize on yourself or your data or these assets. It becomes more about you becoming the property rather than letting others kind of monetize on you. So this is how I saw Web3, and this is why it kind of excited me, is kind of taking control back to the individual.
All right, so Dispersion Capital gets off the ground, and what do you do? You've already been investing.
Right.
So you've got relationships with some of the companies that are probably going to introduce you to other people. Or you have your eye on other companies. How are those first few months for you?
Starting Dispersion Capital is probably one of the most humbling experiences of my life, because as a VC, you put all these entrepreneurs through the ringer of raising capital, and you ask lots of tough questions. And sometimes you even squash people's dreams because you're really digging deeply in. So this was the first time that I personally was raising capital for myself.
Right.
As also as a founder and an entrepreneur, I had this idea, and I was going to build this new venture fund with a new kind of strategy and idea that was different. And everyone thinks what they're building is a little different, but when you pitch this idea to multiple different people, you kind of realize very, very quickly that people have their own opinions, and my dreams got squashed as well. So it was incredibly humbling, but I'm very fortunate to have so many great supporters, from advisors to mentors to investors that were early believers, invested in it early on, and that kind of snowballed. So I was very, very fortunate to have that. And the great story is a lot of my former founders and companies ended up reinvesting into Dispersion Capital. People that I backed early on believed in the vision and reinvested back into Dispersion Capital.
I don't think a lot of people realize that venture capital does have those. I mean, it's sort of those layers again, right? It's like, from the outside, you might say, oh, it's a venture capitalist is someone who has money to give it to someone else to hopefully get their money back and then some. That's the idea. But you are really founding a company yourself.
Yes.
And hoping that people believe in you in order to then and trust their money with you to be able to do things that they either don't want to deal with or can't. So,
Yeah, and that was kind of, how I went through that whole process of should I even start Dispersion Capital? Because there are so many different micro VC funds out there. What's going to be different from this fund versus another fund? Not only there are so many micro VC funds out there, there's so many Web3 funds out there as well. So, for me, going through that process when I was talking about over analyzing, that's what made me, dig in pretty deeply to figure out what's so special about this thesis? What's so special about me? Why should Dispersion Capital even exist in this world of VC and Web3? And what I decided after a lot of digging is, and research was, this thesis that I have around decentralized infrastructure is something different and something unique. And when I was pitching it to a lot of these, LPs who are investors into funds, people didn't understand it, or people didn't believe in it. And, that was a kind of tough pill to swallow, but you realize that, you have to kind of stick to your conviction to what you're trying to do. And eventually, hopefully, you could prove it out by showing, great investments, showing this thesis working. And this is eventually kind of what ended up playing out was, people didn't understand the synergies between edge computing and blockchain. But now with this huge AI hype that is happening now, it's kind of pulling that thesis forward. So it took a few years for it to happen. But now, fast forward now, a lot of it is coming to fruition.
Yeah, you hear, I don't know, depends on who you hang out with, but I hear stories, for people saying, oh, it all used to be crypto, now it's all AI. Now, do either your portfolio companies or companies that you're watching in general, has that line blurred? I mean, I know it's blurred, but how much has it?
Yeah, I mean, I think AI is still on its own, and there's a lot of companies that are trying to say AI plus blockchain more to try to, capture some of that AI hype right now. In the venture landscape, crypto, Web3 is kind of a little bit more forgotten. It's not as prevalent as it used to be. But there are use cases that we're pretty excited about where there is this overlap within AI and blockchain. Where we're seeing the overlap on AI and blockchain really is around this decentralized infrastructure where, you're going to have autonomous agents on the edges. You're going to need to have these AIs to interact with each other, to authenticate, to maybe even do micropayments with each other. And that's where blockchain kind of comes in. Other components are, all about this data component that we were talking about previously is, training these new large language models or various different AIs. You can take data from various different disparate pieces. And that's where the blockchain component comes in from, either access or rewarding those data.
I noticed on your website that there in many places, pitch us, get the pitch us button. How much do you get pitched? Like in a given week, how many pitches are you looking at?
Yeah, I mean, in venture, we try to see as many companies as possible. The top of the funnel is one of the most important things. And, we try to stack the entire day full of pitches. And that's that for us. We try to do as many pitches as possible. I would say that we try probably on average see about 5 companies a day.
Oh, my goodness.
And that's, companies that actually pitch us. But we see significantly more from either referrals or market landscapes and various different demo days. But we try to meet as many companies as possible. And, eventually, as you become a more seasoned VC, you hopefully you have a more targeted funnel of companies that we meet. But a lot of these companies, they're all amazing companies. And, as a VC, you have to focus on your portfolio construction, so we can't invest in every single company that we see.
Of course, yeah. Well, knowing that, how do you decide? Okay, this is the company. Of the 5 we saw today, it's definitely that 3 p.m. What are some of the things that I guess you weed out? Like this isn't a good fit, or this is.
Yeah. So Dispersion Capital, what we're really focused on is we're tech-led investors. So everything that we invest in usually is led with kind of tech innovation. And is this technology differentiated than their competitors and the market? And a lot of times that helps us de-risk the opportunity. And we're not saying that tech is the end-all be-all, but a lot of times that is one way that we could cut through the noise. Where Web3, you do have a lot of, fake it till you make it or scams, as we've seen. And, this is one of our gating criterias before we make an investment. After it kind of passes that gating criteria, then we dig into the typical various different areas from what kind of problem are they solving? Is it something that can be monetized in the short term and long term? And who's a team that's building it? And that's some of the most important things for us.
I also, there was a line on your website that stuck with me, and it was, we invest in things before they're obvious.
Right. Mm-hmm.
Which is great.
Yeah.
Everybody wants to do that. So how do you do that?
Yeah. And how do we do that is, we're very research driven, and we try to, look at the whole technology spectrum, and especially for Web3, look at that infrastructure stack. And one of the things that we do differently, or, I would say is a little boring, is that, we see ourselves as Web 2 investors, but also crypto native investors, because we've, have this historical background of traditional Web 2 investing, but we also have this, being in blockchain as early as possible from the 2014 timeframe to now. So we kind of marry the two. And one of the key theses that we have is for Web3 to take off, to become mainstream, is that you have to see a lot of the Web 2 technologies and rebuild it. You can't repurpose this or put duct tape on Web 2 technologies for Web 3, but you have to rebuild a lot of this for decentralized infrastructure for a lot of these developers. And right now in Web 3, the developer stack is very, very nascent. It's missing a lot of pieces and tools. And that's one thing that we're super active in. We're looking at decentralized compute, decentralized storage, and these different areas that kind of need to be built. We're looking
You've already identified what's missing.
Yeah, we identified the missing areas first, and then we go out and find the builders that are building it. So we've been actively looking at the data infrastructure space, the Web3 cybersecurity space, and so many more of these components that we think are missing.
So let's say you take a meeting with a company, they do something cool, but they're not really solving a problem that you've identified.
Right.
What is your advice to a company like that? Saying like, hey, you got something good here, but here's why, it doesn't seem like it's a great fit for us.
Right. And first of all, we don't know everything. So, when we do our research, it comes with a lot of biases as well. But one of the most exciting thing about venture is, we're learning from all these entrepreneurs. The entrepreneurs themselves are the true experts. They are, dedicating their entire life to building these companies. So we learn significant amount from these entrepreneurs. And a lot of times, we refine our thesis after meeting some companies because we realize what they're working on is an area that we didn't even think about or we didn't even realize. Right. So sometimes, a lot of those entrepreneurs have come to our door and, it was not part of our thesis. And then we invested in them because this was something that we didn't even see happen. Or sometimes it's something that's not inside of our research. And we've seen that, a certain market play out, or we see that their technology can be repurposed for something else, then we'll offer that advice. So, one example is we did see a data infrastructure company that was trying to do Web 2 data infrastructure, but that's a spectrum is, that industry is very, very crowded. But we realized in Web 3, this was not how it's done yet. And we kind of suggested to them to maybe think about exploring Web3, and they did, and they became one of the premier Web3 data infrastructure companies.
And there you go. Yeah, so everybody wins.
Yeah.
When it comes to, you mentioned a few minutes ago, a lot of this is who you know, a lot of networking, a lot of, taking time with companies, learning what they do, maybe saying, we never thought about that. Maybe this could be a great partnership type thing. If somebody isn't a real extrovert and wanting to do this all day, can they do what you do?
As a VC?
Yeah. As a VC, we're an entrepreneur, but I guess a VC.
Yeah. There's a lot of VCs that I would say are not natural extroverts. And, I would say that I'm kind of also a balance between the two. There's a lot of VCs where, it is required to talk to a lot of people. It is a people's business. And you can spend a lot of time researching technology areas, markets, doing all the analysis you want. But analyzing people is also equally important as well.
Sure.
And I think, you don't have to be an extrovert to analyze people. Being an extrovert helps with the networking component of it. But yeah, I think a lot of times the most important skill set outside of doing research is the people analyzing part. And that's pretty difficult in terms of, if you're not a good people reader, it's harder to be a good VC. That's just my opinion. And there's a lot of nuances in reading people. That's difficult. That's why I think with this whole remote work, it was very, very difficult for a lot of people to, to do venture because you couldn't meet the entrepreneurs face to face. You couldn't see who they really are and what kind of dreams are they trying to follow or what they were trying to build. And, maybe that's why, some of these, areas of diving in kind of slip through the cracks of doing the proper diligence or not reading the person correctly, etc.
Let's talk about NFTs. NFTs were a very big deal. You could call it a craze not that long ago. And people I know who weren't even really interested in art, as far as I knew beforehand, were getting on the NFT train. It does not feel like it's a craze anymore. I think, either people didn't get it, lost interest, didn't make the money that they thought they were making, but it's still a very thriving part of the blockchain industry. Yep. So what are your thoughts on NFTs?
Yeah, NFTs is actually pretty near and dear to my heart. So, one of the first use cases that we discovered when I was creating the blockchain thesis was digital assets. And we didn't know they were going to be called NFTs at the time. We just knew that blockchain would enable digital assets and immutable, unique digital assets for potential users, because this whole new generation of people coming online, especially the Gen Zs, or I don't even know what you call them these days, or millennials, all lived on the internet first, and they treat digital assets just as physical objects, just like owning a baseball card when you were younger. Those had sentimental value. People now view the skins that they have in games just as much as these kind of trading cards. So, when we're creating these blockchain theses, that's how we decided to invest in Dapper Labs very early on, because we saw when they invented NFTs and wrote the standard for NFTs, this is what we were talking about. This was the digital assets that we're talking about. And but we didn't have any idea that the market would explode like it did. We just thought that digital assets were going to be something that people can own and people can use. And this would just be a utility, an everyday thing where, every JPEG will become a, owned NFT. And, when we saw this massive NFT craze happen, this explosion of speculation, we didn't know if it was going to be sustainable or not. We were all learning just with everyone, but it really educated the market what was the power of NFT and how people could collect NFTs and what could be done with it. And I think this happens on every single crypto wave. Is you have an asset that explodes in speculation. In the last wave, it was kind of the ICO market where everyone realized, oh, you can just mint a token, and then it explodes in asset prices, and then it collapses. But this kind of created the idea of, there's new methods of fundraising. There's new methods of creating utility in the market. How do you create a network? And then, fast forward to the NFT market, NFT asset prices exploded. But then this kind of educated the market very, very quickly. You kind of everyone realized this is what an NFT is. This is what we could do with an NFT. And now I think the next generation, as the market kind of collapsed, is what do we do with these NFTs? How can we use them? And, the great thing that's happening in this wave is there's a lot of innovation happening around games where you can own the NFTs, you can have some sort of utility on the NFTs, but it's not just about like speculative pricing. You're not trying to buy the NFTs just because you think they're an investment opportunity. It's because you actually enjoy it, you love it, and it's going to be a part of
something of value.
Yeah, something of value, something that you can use. So we're really excited about seeing the utility of NFTs in the next wave, and we really think gaming is kind of going to be that new market that takes off. But where, NFT is not in your face. So you don't have to think about the speculative price of NFT. You're just excited to own it because that's part of the game itself.
Part of the experience.
Yeah, part of the experience.
Yeah. Okay, so we're in crypto winter. NFTs no longer a craze, more of a thing that people go, okay, let's take a step back and figure out what's really of value here. Mm-hmm. How has your job changed? Your role in this whole ecosystem changed since, a bull market has waned, has cooled off.
Yep. And, I think when you're in the crypto bull market, it's really actually very difficult to invest because, luckily for us, we almost never invested in the bull markets because, we kind of take a step back and see, the frenzy that's kind of happening. But at the same time, you can't help, as it's human nature to kind of feel a lot of FOMO that happens. You
Sure.
want to participate.
That's where you see Series D rounds.
Yeah, it was crazy.
People are like, come on.
Yeah, and you feel like you're missing something. Even for me, when I saw all of the huge hype in NFTs and I wasn't doubling down on our investments, I had a little bit of FOMO. And I think the most difficult part of investing in a bull market is separating the noise from the actual what's foundational that's being built and what is real and versus what is hype. And the good thing about now kind of cooling off a little bit, being in a crypto bear market, is you have a lot of the builders who are true builders, true believers, and they're in the market actually building for the future. Where in the bull market, everyone kind of comes in, and you don't know who's actually here for the long term or who's here to make a quick buck.
Right.
So that's the great thing about in a bear market is you're really seeing the builders who are very excited about this technology, trying to push the market forward, and seeing what they're building can be actually implemented into these mainstream adoption. And that's what we're all about. Is we're trying to find technology that will push forward decentralized infrastructure, that will push blockchain into the masses, rather than having these asset bubble creation.
All right. So you mentioned that you were running a web design company when you were in high school. Somewhat unusual. Yeah. I mean, maybe not these days, but a lot of high school kids are. You said you're on the tennis team.
Right.
There's only so many hours in the day. Yeah. So going from something like that at that age, you're a teenager, and I assume you're making some money, or you wouldn't have been doing it at all. I mean, what kind of life lessons do you feel like that taught you that you still can identify today?
Yeah, I mean, I would say, those life lessons from not just like the tennis component and being on a tennis team and also starting your own business, is a lot of it has to do with like creativity and resilience. Because a lot of times, all of those formative years helped me start Dispersion Capital, because, you take a lot of no's, especially when you first, back then, creating websites, no one really had websites yet, and people didn't understand them yet. And I was just doing it for fun. And eventually you kind of learn that, there's a lot of market opportunity for various different small businesses to know, put their website out to get more, information out there for people to kind of see. And no one knew where to even begin, how to find someone to create a website for them, or why they needed a website. So going out there and learning this whole sales motion and going out there and talking to people. And that's kind of like my first foray into the most basic skills of sales, and having this unique resilience of hearing a bunch of no's before you get your first yes. But then leveraging a lot of that yeses into more yeses, because people end up using referrals. And these are like super early life lessons you don't realize early on that are very, very unique. Not unique, very, very critical for growing any business, from any startup to starting your own fund to anything. So a lot of our early investors also came from great referrals, from great experiences. Our founders as well, the companies that we invest in, come from great referrals from other founders that kind of really loved working with us and stuff like that. So we're very blessed from those experiences, starting a website design business to being a founder of Dispersion Capital.
Would you ever go back to investment banking?
Never, ever. Those years are
ship has sailed. Yeah.
We'll never look back. I still have PTSD from it.
Oh boy. You're probably not the only one. So what do you like to do when you're not taking 5 pitch meetings per day? Hopefully 5 days a week and not 7.
Yeah. I mean, my life these days have changed significantly. So it's kind of funny. When I first started Dispersion Capital, I was also at the same time, I had my first daughter, or my first child, who is now 19 months old now. So there is, thank you. So there is no work-life balance. Dispersion Capital is my first baby, and then my second baby is my real baby. So living and breathing both of those nonstop. So no, that is, both of them are kind of pride and joy of my life at the moment. And it's super fun balancing both of them.
Well, it's for you to say that's kind of it. Yeah. Those are 2 pretty important things. Yeah, right.
Very, very, very important things. But yeah, I mean, back in the day, like I used to kite surf a lot, where it actually had this big network of entrepreneurs that's kind of big in Silicon Valley.
Yes, you're not the yes. That's probably how we know some of the same people, some of the kite surfers. I asked you about mentors earlier in our conversation. What about today? Who would be somebody that you'd love to sit down and pick their brain?
Yeah, I mean,
or who do you have access to that you're so thankful for? I guess that's kind of the same question.
Yep. This is a little contrarian kind of idea, and hopefully it doesn't give me a lot of slack. But one of the people I really admire a lot, more is in terms of the way they think, is Peter Thiel. And for us, how we think about things is, a lot of the things are non-obvious and sometimes very contrarian. As well, but we like to approach things with a prepared mind. And I don't have any access to Peter Thiel, or do I even know him at all? We've co-invested with Founders Fund a few times, but I've never spoken to him before. But we approach things very similarly, where we do a lot of our deep research. We try to find non-obvious factors, and that's something that I would love to learn more about. Is how they somehow spot trends way before everyone else, and how they do it in such a consistent manner. And a lot of times, how they persevere through a lot of times where, the entire world or entire market either doesn't believe them or call them crazy and that kind of stuff. So that's something that I really admire, is just the kind of first principle way of thinking and finding new opportunities where no one else does.
Yeah, I mean, he's pretty good at his job. All right, so we know where we are now, and Dispersion is trying to. I mean, I don't know if you're thinking like in 10 years we're going to realize this infrastructure that we're talking about right now. Whatever the time frame is, what is the next phase of whatever we end up calling Web3?
Yeah. I mean, we're really bullish on our thesis on decentralized infrastructure, where we think it's not going to be Web3 anymore. It's not something that's separated out. And I think there is going to be this convergence between edge computing, blockchain, and AI. And our vision is that Web3 technology, or this infrastructure that we really talk about, becomes ubiquitous to all internet infrastructure, all connectivity. So that it's not separated anymore. Just like cloud computing today is, where, cloud computing is invisible. No one thinks about, is this streaming? Is it locally being processed on my device? And I think that's what the future is going to be, where blockchain technology is not going to be something that has such a barrier to entry. You don't have to think about owning a wallet, having a wallet, your own token, stuff like that. It becomes this invisible technology that just magically works. No one realizes how it works, but it just magically works.
Right.
Exactly.
You realize how it works if you want to.
Yes, exactly.
But you don't need to.
Just like cloud. But like the layman, the masses don't have to know how to operate it.
Right. And how long do you think it will be till we get to that point?
I think we're slowly getting there, and it's inching a little bit forward, but I think a lot of the current wave has pushed it much faster. I think for it to be kind of this invisible technology without the wallet, angle, there needs to be a lot more wallet innovation that kind of happens, and slowly happening there. We have a lot of key management companies we've invested in, a lot of white labeled wallet solutions, wallet infrastructure. There's so many more components that need to happen, but I think about 5 to 10 years is a good time frame where this finally becomes this invisible layer, invisible stack in the technology stack.
Okay, so if people want to know more about everything that they do, where do they find you?
Sure, yeah. I mean, on our website, dispersion.xyz, you can find everything about our thesis, areas that we invest in, the people on our team, as well as the type of companies we invest in. But I'm on Twitter and LinkedIn and all the various different social media channels.
I think you're supposed to call it X.
LX now.
Yeah,
yes.
right.
So apologies, yeah. Sorry, Elon. X now.
What is your handle on it?
Yes, X, it is PC Dispersion.
PC Dispersion.
And my email is patrick@dispersion.xyz.
All right. Well, you might be hearing from some people.
Great. Looking forward to it.
Patrick, thank you so much for joining us on Speak Bold. It was great to talk to you.
Super fun. Thanks again.
Mm-hmm.